Good morning, guys. It is Monday, November 25th, 2024. This bathrobe business. I'm out of coffee, but I have the news. So I'm going to share with you guys one thing real quick with the trades I've been doing. I've talked about on this channel. So this is from Friday. So I'm going to share this slide with you guys. So as you know, I'm trading two stocks right now. The first was Best Buy. The second was Bath and Body Works. So as of Friday, let me blow up the screen. So Bath and Body Works, again, I was waiting for earnings to come out. But Best Buy, I was kind of just waiting for the pop. I bought it at 87, expected it to go to about 89.90. It hit $90, $89. I made my little measly $267 on it. I sold it Friday. So I was waiting for earnings today for Bath and Body Works, thinking, oh, it's going to come after the bell. No, it actually came before the bell. And I was right. They had a fantastic quarter. So currently, they are up about $6 in the pre-market. We'll see what that means after they open. But $6 in the pre-market means around $1,900. And if they go higher, then fantastic. Now, mind you, this is the second trade I made on Bath and Body Works in the last month. If you remember, I actually originally bought it at 29, sold it at about 31.50, exited, then bought back in at around 30. And now I'm probably going to exit again today in just a couple minutes. So the market opens in about 15 minutes. We'll see what comes of it. I'll share the numbers with you guys tomorrow morning, and we'll go from there. So just thought I'd share that with you. And also, actually, I was pretty proud because on CNBC this morning, it was one of the trending topics is that Bath and Body Works is doing fantastic. So you heard it here first. All right. So I got to take pride for that one. All right, let's jump into it. So first thing, let's just jump into the pre-market overall. So let me share this screen. 1 second. I got to switch things real quick. Okay, here we go. So in the pre-market, we are looking at a pretty strong open. The Dow is up about 300 points following Trump's pick for Treasury Secretary, and I'll share that story with you guys in a minute. Gold is actually down ever so slightly, shed about 2% of profits. Crypto is doing good, still below the 100,000 mark, but hovering around it. So let's jump into the news about the new secretary. So there's not too much information on him yet. And did I close that tab? Well, I'll tell you what. Let's just go into it right here. So Trump's pick for a Treasury Secretary. He's a hedge fund manager. I have not heard of him before. It is Scott Bassett. He runs Key Square Group, a large hedge fund on Wall Street. So again, I don't have much information on him, but there is a quote in this article that I did like from him. So he essentially talks about that he is going to offset tariffs in an incremental level. So essentially, he's saying that there will be tariffs. They are going to come in incrementally, not all at once. It's a smart strategy. He's saying that they're going to couple tariffs with extending tax cuts and pushing for deregulation. So in other words, having a tier system, every time they're deregulating, they're also raising a tariff. So they're going to have an incremental system to make sure that inflation maintains a 2% target. So in other words, they're definitely going hot into tariffs. It's definitely going to be a mainstay of the Trump administration. With Trump, you never know. I mean, there's a lot of bluster. So he says one thing, does another. But it looks like the tariffs things he is serious about, because here the first thing the new Treasury Secretary talks about is that, and that he's going to do it incrementally so that everything remains on target. Here it goes. So here's the quote I was looking for. I would recommend that tariffs be layered in gradually, Bassett said to CNBC interview. If you take that price adjustment coupled with other disinflationary things President Trump is talking about, we're going to be at or below a 2% inflation target. So it's interesting to see which direction it's going to take. But definitely tariffs are going to be at play. So this is interesting. Now, I guess it's not too surprising. Trump issued tariffs the first time around. The Biden administration kept all of the tariffs that were in place and then doubled down on a lot of new ones. So Biden administration issued 100% tariff on EVs, as well as solar panels, all electronics coming from China. So for those that think tariffs are going to be an issue only for the Trump administration, forget that the Biden administration doubled down on tariffs. They did not get rid of any. In fact, oftentimes they were strengthened, because one of the problems with the Trump administration is that bureaucratically they really didn't know how to pull the right levers, whereas the Biden administration actually did. Biden's been in politics his entire life. He knew who to nominate for which positions, and the tariffs were probably more severe under the Biden administration than the Trump administration. And this time around, Trump may be doing it a little bit smarter, but tariffs are definitely going to be part of his administration. By the way, Bath and Body Works, here's a story about it, jumped more than 20% in the pre-market trading. So there you go. Now let's talk about, since we're talking about retail, let's talk about Gap. So these earnings came out on Friday. I lied. This is, I guess, Thursday evening. I'm just getting to them now. Let me make sure I'm sharing the screen properly with you guys. So another retailer that is doing fantastically well. So Gap shares surge as it raised guidance, touts strong holiday start. So by all accounts, this holiday season is going to be incredibly strong for retail. Like I've said on this channel repeatedly, if you are in the trading space, if you're looking for investment, retail is the place to go. Now, you still have to be choosy, because I'm going to share with you guys another article that shows a lot of weakness in a particular retailer. But overall, overall, the retail market is incredibly strong. This is probably the fifth company I'm sharing with you guys in the last couple of weeks that are having incredibly strong retail quarters. This is something that began back in September and has continued through. That's why I pushed for Bath and Body Works so hard when I did. So Gap had a fantastic quarter. They reported revenues of 72 cents per share versus an estimated 58 cents, 3.83 billion in revenue versus 3.81. Now, to counter that, let's talk about the negative. So I shared with you guys Target last week, which had a terrible, terrible quarter and is likely to have a terrible holiday season. But another major retailer, Macy's, is also doing the same. Macy's says its quarterly sales dropped. Also, I didn't mention this, they're delaying earnings until tomorrow. They were supposed to come out today. One of the reasons is they noted that some representative at Macy's, some employee, purposely changed the numbers. So they issued incorrect numbers trying to raise guidance. I guess it was caught, and so now it's going to be corrected. However, they did report that third quarter sales fell 2.4% to 4.74 billion, comparing sales growth of its owned and leased business, blah, blah, blah. It doesn't really matter. Now, this one is interesting because I followed Macy's since the start of the year. I guess since last year when Ark House made an offer to buy them out completely. Macy's was able to fight off that hostile takeover. In fact, there was a moment where both sides came to the table and Macy's entertained a full buyout. But then that fell apart around July. New CEO was in place, said that they were going to restructure and everything was going to be fine. So we are now 2 quarters in. Well, I guess only a single quarter in since Ark House dropped the offer. So since Ark House walked away from the table. However, I think we're about 6 months in from when the new CEO took over, and sales are still doing terrible. So despite the fact that they're trying to restructure, despite the fact that they're trying to change things around, they are doing terrible. And in this environment, it's almost unforgivable because you've got an environment where they're being bolstered by a strong retail sector. Usually, a rising boat lifts all tides. So if retail is strong in one sector, it's probably strong in another sector. So if retail was doing bad, you would be seeing numbers so abysmal, you'd be talking about bankruptcy here. So this is a problem for Macy's. There is no story so far of Ark House coming back. That may happen in the next quarter, may happen in the next couple of weeks. I don't know. But so far, Ark House has not made any new offers. I Googled it. It doesn't seem like there's any stories in the market. But it is interesting that Macy's, despite the fact that they restructured so heavily, have not been able to turn the tide. Granted, it's only been a quarter. It's been about 6 months, but still, in this environment, it is unforgivable. I want to reference something that is also in the news right now, which is the Jaguar commercial, which is terrible. There's no question of it. But I think this is one of the problems with a lot of legacy companies. When they try to turn things around, their history becomes a burden. So in a lot of times we look at them at the incumbents as having an advantage, but in a lot of these scenarios, it's really a double-edged sword because yes, they have sales, they have brand recognition, but the problem is that they just can't turn things around as quickly. And when you have a brand that's in decline, turning that around is difficult. Anytime you try to rebrand or change something, it messes with the current clientele. and they walk away from the table. But it doesn't necessarily bring new clientele into the flow as well. For example, in the Jaguar commercial, I don't know what message they were going for. Honestly, the biggest problem with the Jaguar commercial is there's no clear direction. A lot of people said it was woke, but the real problem is you can change direction. Now that may alienate your current audience, maybe it won't. But the biggest problem is nobody knows the direction that they're taking. It seemed the kind of commercial that was going to be advertised more towards a purse or a luxury clothing brand than it was a car. Had they not flashed Jaguar, you wouldn't have questioned it. And so similarly, I think here, where you're trying to turn things around and restructure, it's very difficult to turn things around when your current clientele has a certain expectation and new clientele is not coming to the table. Next story we'll talk about is we're going to leave retail. We're going to come into Amazon. So Amazon to invest another $4 billion in Anthropic, OpenAI's biggest rival. So Amazon is going heavy again into AI. There does not seem to be any sign of slowing in the AI sector. So Amazon Friday announced that it would invest an additional $4 billion into Anthropic, the artificial intelligence founded by ex-OpenAI research executives. It's essentially talking about the investments that they've already made. They've already made $2.75 billion and just continuing to add to that capacity. But just interesting that despite the fact that we kept calling AI a bubble, which to some extent I still think it is not slowing. The investment just keeps accelerating and accelerating. So this is almost double what Amazon originally put in, and they're doubling down on it. Similarly, we've talked about this on this channel as well, and that's energy and how AI, if nothing else, is fantastic that it's spurring on nuclear energy. In a way that we have not seen in decades. Now, this is a fusion startup, but I did think I'd share it. Now, in all honesty, despite what they say, I don't think fusion is viable. I think traditional fission nuclear reaction is what needs to happen. For those that need a high school refresher, nuclear fission is where you break up particles. Nuclear fusion is where you fuse particles. I shouldn't say particles, atoms. So fusion is always kind of 10 years away from the next breakthrough and blah, blah, blah. So I think a lot of this is kind of garbage. But I think the fact that we are talking about nuclear so heavily, about the fact that there's actual investment, this is a British company, but I thought it'd be worth mentioning. The fact that we're talking about nuclear energy investment and it's becoming such a vital, exciting space is really fantastic. So if nothing else, AI is giving birth to a new nuclear age. I think it's fantastic. That's pretty much it. Those are the stories of the day. So I will share with you guys my earnings tomorrow morning. Let's see where I end up with Bath & Body Works. I hope you guys have a productive Monday. It's a short week because of Thanksgiving, but I should be back here tomorrow. Thanks.